Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Happy New Year, John.
Happy New Year to you too, Jim.
John, back in October 2016, you introduced Red Star Gold and its Unga project in Alaska as a Discovery Watch Junior. Did Red Star deliver the goods in 2017?
Unfortunately, Red Star had success in its effort to grow the Shumagan zone, but grades were not what the market expected. And Red Star, I was pretty enthusiastic about it at the start of the year. I made it one of my Spec Value Hunter recommendations. The company has a large institutional shareholder base. People like George Ireland and Eric Sprott are shareholders. There's 300 million shares out. So it's got the kind of a float, the large float, where you need fundamentally good results to get the stock moving. And I thought 2017 would be a very good year for Discovery Exploration Juniors. But Red Star Gold is almost symbolic of how the year has turned out for most of the resource juniors. They have not delivered, in most cases, spectacular results, which allow the stock to be valued upwards in a substantial manner. And since April, they've been caught in a downtrend of people sort of abandoning the junior resource sector and even shunning the broader resource sector, the producers, even though metal prices, while not stellar, are higher than they were at the start of the year and are looking very promising. In fact, there's almost a divergence between the metal markets and the market's valuation of the resource stocks. And part of the problem, at least with the juniors, is that we have seen a substantial switch on TSX Venture trading away from resource sector juniors into the non-resource sector, where cannabis stocks, blockchain platforms, anything to do with this Bitcoin blockchain stuff. Shells have been announcing they're getting into this. And so we have, in the last month or so, had a double whammy on the juniors, where we not only have tax loss selling as people crystallize losses, but we also see redeployment selling as people just say, oh, 2016 was an anomaly. We're still in that bear market that began in 2011, stuck in a downtrend. So let's turn these losses into tax offsets, and let's chase into these other sectors like blockchain, which have no fundamental value. So no analyst like John Kaiser can come out there and say, well, here's your upside limit and here's the probability of achieving it, and therefore you should be priced like this. The sky is the limit. It's very similar to what we experienced in late 1999, where the juniors were also still laboring from the post-Bre-X bear market, and then the dot-com stuff just went insane. It did peak 3 months later in March 2000, and it still took several more years for the resource juniors to turn around. I think, however, that we are still in a reasonable uptrend for reversal of the longer downtrend that began in 2011. It may take the second half of 2018 for it really to start to accelerate. It's probably going to take another 6 months for the blockchain Bitcoin stuff to climax and then collapse. So for stocks like Red Star, I've had to demote it from being a Spec Value Hunter pick, but I've shifted it to my bottom fish list, and I've decided to extend it. And at the end of 2015, I declared there'd never be a better bottom fish edition than that, and quite a fair number have disappeared as being taken over. And now I've started adding them, and this is where my Spec Value Hunter picks, which lose the immediacy of delivering something big in the upcoming year. But though I still fundamentally like them, I moved them to the bottom fish edition. Red Star's problem was that it doubled the size of the Shumagan zone by drilling both to the northeast and to the southwest, a couple dozen holes, almost 5,000 meters. But the grades turned out to be disappointingly low. The intervals short when the grades, approached 1 gram per ton. This is an epithermal system. It has attracted all these institutional players because this epithermal footprint is present over a very large area, and the trick is to chase the structures which got gold and silver enriched. And in the main part of the Shumagen zone, they had delivered good numbers in 2016, but the numbers to the northeast and the southwest were considerably lower grade. They did a summer program, and the stock took a hit then. They started a fall program, and it started going up again, but then when the results came out, down she went again. The company has only $3 million left. They did observe in these holes that they drilled were actually deeper. The textures suggest they are approaching the boiling zone where the gold and silver enrichment is supposed to take place, but it will require deeper drilling. And the company has already indicated that they may look at some of these other 14 structures that are present on the project and see if they can find something closer to surface on those. So that means the story goes from one that could deliver a big discovery next year back to finding a target that has what it takes to become a big discovery. But the company does own 18% of NV Gold, and NV Gold's ATV Across the Valley project in Nevada is one of our Discovery Watch projects. We're hoping to hear some good news from the undercover drilling, the Nevada 2.0 story, across from the 20 million ounce Twin Creeks. So this could help the company if there's a discovery in this minority owned subsidiary. This could become the basis for the company replenishing its treasury. With a system like Unga, $3 million isn't enough. You need to hit it with a larger treasury. When you're down to your last $3 million, the market starts to become very spooked. And in this case, because we don't have any resources, institutions will have a tough time maintaining their position in it. So it's good for retail audiences at this point, with a possibility of getting lucky when they return to Unga next summer. But one should also see if they can get their balance sheet shored up by success through NV Gold.
We'll have more with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Oriana Resources has woken up in December. Has Keith Barron found one of the lost cities of Ecuador?
Keith Barron is circling in on at least one of the lost cities in the southeastern part of Ecuador. This is a project that he has been working on since 1998. He took a detour to find the Fruta del Norte deposit, 14 million ounces epithermal gold silver system, about 70 kilometers south of the area where these lost cities supposedly exist. He's been working with Professor Latorre Octavio, going through the old Vatican archives, also government archives, looking for clues as to where exactly the roads were, the trails and that, for these two gold mines, Logroño and Sevilla del Oro. Now, what happened in the 1500s is when the Spaniards took over the from the Inca. They marched eastwards onto the other side of the Andes where the Amazon basin begins, and they discovered the abandoned gold mines from which the Incas had mined the gold, out of which they made all the artifacts that the Spaniards had looted and brought back to Spain and create big inflation problem in Europe. So they started operating these gold mines, but they had endless problems with the local indigenous tribes who would come there and attack them and wipe them out. And gradually this all fell apart and it disappeared. And there's been efforts to try and find these former gold mines in the little cities that were built around them. Now, finding a little high-grade gold mine is not what Keith Barron is after. He's after a large-scale porphyry system, such as, say, the Cascabel copper-gold porphyry system, about 400 kilometers to the north, found by Cornerstone and Sol Gold, which is a world-class discovery, or what's often in the vicinity of these porphyry systems, intermediate to high sulfidation epithermal systems, such as the Fruta del Norte system to the south. So this area is all covered with jungle and rivers and sort of the slopes of the fading away Andes mountain range, and it's very difficult to see what is going on. On December 6th, they published a news release that revealed preliminary results from an airborne geophysical survey they had flown over this area, and they identified what they're calling the Waka target magnetic anomaly that suggests a porphyry system. And they've been going with their crews through these areas, wandering up the streams, doing sediment sampling and trying to find where the gold that is farther downstream ends up coming from. And this geophysical survey has narrowed their focus considerably, because now they don't have to sample every single stream in their effort to track down the source. Now, the interesting thing is they staked 206 square kilometers in 2016 when Ecuador lifted its moratorium on staking. In 2014, Lundin Gold had acquired the the Fruta del Norte deposit from Kinross, which had paid $1 billion for it in 2008. And of course, in 2008, the government then introduced these windfall royalties, which pretty much killed. But the Ecuadorian government has since realized that the tax regime they invented, which was more modeled on oil production, where such a regime is appropriate, does not work for the capital-intensive mining industry. So in 2015, they with the help of Lundin Gold, they changed the rules, made them a lot more friendly. They still have windfall taxes, not as bad as before. It would be nice if they got rid of the whole concept of windfall taxes for mining exploration. But the pop in the stock, it started inching up a bit after December 6th, but the recent bump was caused by a Bloomberg article published on December 20th that describes the 4-day adventure of a Bloomberg reporter who conducted a site visit and got to see firsthand what this quest of Keith Barron is all about. And it's interesting that they suggest that drilling might even start within 6 months. It will be interesting if they do have a target narrowed down sufficiently for that. But this article clearly got a lot of eyeballs on it, and there's a lot of people watching this to see what's going to happen. But there was a very peculiar comment that Keith Barron was quoted as making at the end of the article, and he suggested that even though they might be drilling within 6 months, that the odds of making a big strike are still about 1,000 to 1. Now, I think that is a very strange thing for Dr. Barron to say, and it's actually a disservice to the whole process of exploration. Oriana currently has a 31 million shares, and at a 240 stock price, it means the market's assigning $74 million value to the Lost Cities project. But if the odds are still 1,000 to 1, that's like saying the market's expecting Ms. Dr. Barron to deliver a deposit worth $74 billion. Now, this just doesn't happen in the resource sector. And so what I would like to say is it would be good if people like Dr. Barron and Brent Cook would limit the 1,000 to 1 odd language to the very beginning of the exploration cycle, where you're looking at a vast region and you have thousands of potential random locations to put a drill and come up with nothing. The whole purpose of data gathering is to discard, to vector in where's the target within a region that is prospective for a big strike, a major, world-class deposit, $1 to $2 billion. Now, I would say that at this stage, the odds are more in the 30 to 15 for 1, which suggests that the market's expecting Dr. Barron to find one of these lost cities and prove that it's associated with a major system that's going to be worth $1 to $2 billion in after-tax net present value terms. So this is where I think we are headed with this project. The market's starting to wake up that all the effort of data gathering and archive sleuthing is finally narrowing the focus, where we're dealing with odds considerably less than 1,000 to 1. And in fact, in the exploration junior game, we assume that the move from 1,000 to 100 to 1 odds is something the company does pretty quietly and doesn't tell us shareholders or investors about until it's narrowed it down so the odds are less than 100 to 1, at which point it becomes meaningful to start placing market bets on the company in terms of the stock price, the fully diluted, and the net interest in the project. And it's good to see Dr. Barron finally having the data sets come together so that one of these lost cities is going to come into the sights of his drill rig later in 2018 and hopefully deliver a big discovery.
We'll have more from John Kaiser right after this.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, have you started watching anything else in Ecuador?
It is time to start taking a serious look at Ecuador. In April, expectations that Ecuador was in an upturn in terms of more market-friendly policies took a hit when Lenin Moreno, the hand-picked successor of Rafael Correa, won over the so-called millionaire banker Guillermo Lasso. And people said, oh no, here we go back to these left-wing populist policies. Correa is a big firebrand. He thinks he's another Hugo Chavez who helped destroy Venezuela. And Ecuador took a bit of a sag this year. But today there's an article in the Financial Times which argues that President Lenin Moreno has been a very pleasant surprise for, foreign investment, for even hopes for an economy which is on the ropes because it is very much dependent on oil production. And we know $50, $60 oil has not produced the same sort of revenues as it did when it was $100. It seems that Rafael Correa is very upset and tried to get Moreno kicked out of his own party, but failed. And Moreno, who turns out to be the complete opposite of the firebrand, he's stuck in a wheelchair because in 1998 he got shot in a robbery. He's soft-spoken, but he's adopted a very pragmatic approach where he's dealing with all the interests, and he's even trying to get Correa totally marginalized, because Correa thought that Moreno was going to be a caretaker, just as Putin successfully did with Dmitry Medvedev in Russia, and now Putin's back in charge. Correa hoped to be back in the saddle by 2021, but in fact Moreno's trying to get a referendum done in February, which would actually ban Correa from running again for the leadership of Ecuador. So we may see Ecuador back on track. The disappointment that the de facto market-friendly candidate did not win is being ameliorated. So it is time to start looking at Ecuador, because Ecuador is probably the most underexplored part of the Andes in terms of mineral potential. There was a big country play that got going in 2006 when Aurelian found the Fruta del Norte deposit. It got interrupted. It's making a slow comeback, and it's time to look at other juniors. The one that caught my attention earlier this year, in which I recently turned into a bottom fish watch candidate, is Toachi Mining Inc. Toachi is a company run by Jonathan Goodman, who is the child of Ned Goodman, who is most likely to inherit Ned's mining titan crown. He spent 1995 to 2013 working on Dundee Precious Metals, which developed mines in Eastern Europe. He's a mining engineer. He loves the space. He's created a private equity entity called Metaform Investments. In 2015, he took a stake in Toachi, which at this time was a burnt-out iron company in Bolivia that wasn't going anywhere. They reorganized it, and they optioned up to 75% of the La Plata VMS deposit. Now, La Plata's been around for a long time. It was found in 1946. It was put into production in the late 70s, both open pit and underground, about 130,000 tons. It is one of 3 VMS deposits within a 100-kilometer range of relatively young volcanics. And what makes them interesting is that in addition to having copper and zinc and lead, they are quite well enriched with gold and silver, sort of order of 3 to 5 grams per ton, which they're in the style of the Kidd Creek deposit, but the gold enrichment also makes it in the style of the La Ronde deposit of the Abitibi Greenstone Belt. One of my former picks, in fact, Cornerstone, which is now the minority partner in the Cascabel project and is gearing to spin out all its other projects in Ecuador to sort of relaunch as part of this whole reawakening of Ecuador. It optioned this project in 2005, flipped it to another junior. Even earlier, other juniors had taken a shot at it. Toachi has spent $6 million since 2015 redrilling the project. They delivered the first 43-101 resource estimate for this VMS system a couple months ago. They doubled what was the earlier resource that the vendor Alan Brown had come up with. So 1.9 million tons in 2 zones. With a rock value at current metal prices of about $582. They've been doing metallurgical studies and coming up with flow sheets that make sense, and they hope to have a PEA delivered before the end of the first half of 2018. There is some potential for exploration drilling, but these VMS systems are difficult. They're small. You got to find one and then sort of track it down. They haven't had any luck yet converting any of these peripheral targets. So the focus now is to demonstrate to the market that we have a system here that's worth developing into a mine. Because it's relatively small, it would be sort of 500 to 1,000 ton per day. And that's important in Ecuador because the windfall profits tax regime does not kick in unless the underground mine is greater than 1,000 tons per day or 3,000 tons per day for open pit. And so with the big institutional following that they have, and with Jonathan Goodman at the helm, this is a stock that this project could become sort of the stepping stone for building a junior which expands within Ecuador and possibly elsewhere. So the new project to watch is the La Plata project of Toachi. The discovery has already been made, but it now needs validation that the numbers are good enough to support mine development, which, if they are, the company will proceed with a feasibility study in the second half of 2018.
John, thank you so much for the update, and I hope you have a great new year.
Thank you very much, you too, and so also to our audiences.
I've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.